Good morning. This is Howie trying to help you win with money. Today is Thursday, October 8th. And what I'm thinking of doing this morning is to row Apple and make some more premium. So, watch this video if you want to see me roll this into a new Iron Condor. Stay tuned. Welcome to my YouTube channel. This trading channel will be used to cover my options trading, stock market, and dividend investments. I will show you what I'm doing and explain the reason for what I'm doing. My end goal is to help more people learn that investing can be done by anyone. I believe that ordinary, everyday folk can achieve extraordinary results without taking on the extra risk. Enjoy this episode. Alright, welcome back. Thanks for staying with me. So let me explain what I'm trying to do. Here's a spreadsheet that I keep of all my open options positions. Not all. I mean, there's a lot of them. Mostly spreads I keep on here. I have a whole bunch of cover calls that I don't track on here. But the interesting thing is to look at the days of expiration. I normally like to close these, anytime between around 25 days or less. Um, so I've been looking at this and seeing, do I have any that need to be reset out to about 40, 50 days out? So I looked at the price. These look fine. They look like they're gonna be a little bit cheaper for me to close in a few more days. So today I want to focus on Apple. So this one in particular, this one I rode in the past. I rode the put leg into the future. And today what I want to do is let's try to make some money by rolling this side. So with that, let's jump to E-Trade. I found my positions here, all my open options that I have. I have different dates and different contract sizes. And here's the one that I'm looking at. So this one is going to expire in 15 days. The first thing I did was, let me see how much it will cost if I closed it. So if you look here, you'll see that it's 52 cents or about $100 to close. Rode this one because Apple moved against me and I was trying to fix the trade, and so this is a continuation of that. So what I want to do now is, this trade is, in general, I think I'm out of this one safely, but I want to push this out in the future. So let me show you how to do that. So let's pick a date. I already have a 6 and a 13. So let's pick, if I have a 6 and a 13, let's pick the 20th so that we can stagger or ladder them. You see the prices change. They went with these, the monthlies are still on these pre-split, and that's why they look like this, because of the split from, because monthlies generally go out in the future, and you can see that. And then when the split happened, it causes the strike price to look like this. So I don't know what I want to do. So let's just pick something real quick. Let's pick a 120. Let's do a 127. And if I do a 127, I don't know what that should be. If I add $5 to it, right? 51. So let's just plug some of these numbers in, as I always do. I'll take, right, you take all these, you copy it in, change the date. We're going with the 20th, 43 days out, and this one says a 127.50 to a 132.50. The other thing I want to check is, let's check what the odds are. So I have it open here. A 127.50 is over here, 24%, which is pretty risky because there is an earnings coming up for Apple on the 29, but the 29 is here, right? 3 weeks away, but my option doesn't expire for another 3 weeks and a day. So that may be okay. So even if Apple blows out the numbers and it pops $130 a share, I have plenty of time to move this forward and collect some more premium. So that's what I'm thinking right now. I don't know what I'm going to do until I build the trade. So let's just go back to Etrade and let's go build this out. So let me just check some of my other risks. Make sure it recomputes it. So I would be increasing the width, which is what I want. I don't want it to be more narrow than what I have. The original one was 13. You see how tight that was? So I actually keep track of the old width. So even though I closed it, the original width was a 13. You see this one is a 15. This one is a little bit more wider. So I definitely don't want to go more narrow than 13 or 15. So because there's more time. Remember that. There's 43 days. You want to make sure you're accounting for the way stocks move. Right now it's a $51. This is a really bad rate of return. Normally you want to go for 1/3 or higher, which is 33% or higher. So what that is the premium that you collect per contract normally should be 33% of the width between these two. So I'm doing a $5 width, or is it 160 bucks? Yeah, 160 bucks. But I'm not collecting that. I am collecting a much, you see that, 1/10 of that. I mean, 1/3 of that, right? So I'm collecting $52. Now, I'm okay with not following those rules. It isn't earnings. So the farther I go out, the less premium I'll collect. So it's this risk reward, right? If I push this out a little bit lower to be safer, right? Or not lower, but farther away. So what I will do is I actually do want to go a little bit safer. So let's just go safer. I'm okay with collecting a smaller premium, believe it or not. So let's just do that. There's two contracts, 140. Let's try to get that in. See if the roll happens. Still open. Okay, it took a little bit longer to go through. I had to lower it to 71 cents. So it went through. Okay, so now let's add in the other side. I like to always make it an Iron Condor. Let's not worry about that right now. Let's do this. Let's figure out what the price is. I think this is way too narrow. I cannot use 109, 105. So we'll pick a number down here. We'll go back to here. We'll look at the percentages. You see a 109. Oh, it's not even an option anyway. So you see the odds are really bad, and which mean the likelihood of on either side will go against me. So I need to go a little bit safer. I may go down to, oh look, the premiums are really high. So since I'm playing safe and I'm using a really wide width, I can do that. So I'm going to test it out for 100 and then we'll go down and we'll see what happens. So let me build that out. 100. And you know what? I'm on the wrong date. That's the first thing. So let's change the date. If I recall correctly, I think I used, yeah, the 20th. That's correct. Yeah, the 20th. So what I'm thinking of is I'm actually going to lower it a little bit more. So I think that's what I'm going to use. 91.25. 98. So I'm just creating a really wide Iron Condor. You see that? And it has to move $16 on the downside or $13 on the upside. I'm not going to collect a lot of premium. I got 71 on the downside, on the upside, and then so it would be, based on what I see here, 0.96. Add that together, it'll be $1.67. 167 is what I would get, and nah, not bad. Not good, but it's enough. So I think that's what I'm gonna do. We'll submit that. Let's do 90. Let's do 96. So I'm looking for a put. There you go. It went across. So that, my friend, is another one. Okay, so I fixed this one. This one is now gone, and I replaced it with this one. There you go. Anyway, I hope you enjoyed this video, and if you like what you see, please subscribe, hit the like button, and have a profitable day. See ya.